Hi everybody, welcome to another update on the Stock Screener. Today we're going to continue our discussion about Pieridae Energy. So one thing that I didn't discuss yet is the growth. Okay, they have a very big land package and there are 39 holes probably that they can drill, which could double production in time. It is not going to be doubling next year, but in a few years. So it's a growth story in time. So first they need to pay off the debt, make sure they have working cash, and then they can start drilling more holes. So as you can see here, they have 3 gas plants, Caroline, Jumping Pound, Waterton, and they are utilizing only half of it. So they can easily double production on these gas plants by drilling holes here and then connecting it to the gas plants. So first of all, let's see what happens when production rises. So here, this is the production chart historically. And as you see, production has been declining because they had some problems, couldn't drill that much. So there's a decline in the wells. And as production declined, then operating costs went up, right? And you can see that they are negatively correlated. So as production declines, then the costs per BOE will go up. So I added 2 trend lines to this. And let's say they can increase the production back to 60,000. That's a 50% increase. That's doable in the coming years. Then we would see 60,000 here, and that corresponds with a cost declining to like $10 per BOE, right? Because they use the same infrastructure, they just increase the throughput, right? So let's assume that we have 10 operating costs and 60,000 production. So we go back to our PEA grid. We take 60,000 production and the cost goes from 17 to 10. 1.48 is the transport cost. And that gives us the following scenario. So as you can see here, at current ICO price, 6.5 in the winter, there is an upside of 250 million to 4 billion. 4 billion. Let's say that they pay off the debt because the debt will eventually be paid off, 0 debt. Then we have an upside from 250 million to 4 billion, more than 4 billion. So what's this? That's 15-fold at 6.5 by growing the production. At 5 ICO, which is a pretty normal price for Canada, you will see more than a 10-fold from 250 to 3 billion, 12-fold in the long run. And at even at $3 to 3.5, this company can be profitable. At 4-fold, 3-fold at these prices because of the production increase and the cost reduction of the operating costs. Okay, so That's the upside that we have here. And in the dream scenario of 10 ICO, when the LNG gets built and the US gas is going to EU gas. EU gas is currently at 40. Gazprom says that it can go to $80 per MCF in the winter. If this arbitrage closes, we can easily see US gas go to $10. So in the long run, we could see a 250 million go to 10 billion. That's 50-fold, not 15, but 50-fold increase in market cap. You see the growth here that's possible. I think this is one of the best plays out there. If you can find any better place, send it to me. But based on production increases that are possible, a repayment of debt and interest based on higher ICO pricing and lowering operating costs to 10, this company is a multi-bagger. So we keep investing in Pieridae Energy, and I'll see you in the next video.